Olá, neste episódio a convidada é Debora Revoltella, Economista-Chefe do Banco Europeu de Investimento. A Debora dirige a equipa que é responsável pelo relatório de investimentos do BEI, onde todos os anos a instituição analisa a evolução do investimento na União Europeia. Já agora uma nota, estavam lá membros também da equipa dela que falaram e por isso não estranhem ouvirem umas vozes diferentes em alguns momentos da conversa. Para quem gosta destes temas, esta foi uma conversa muito interessante e complementar ao primeiro episódio com a Presidente do BEI, porque pudemos ir mais a fundo e ter uma discussão mais técnica sobre alguns temas. O grande problema / desafio na Europa é, segundo a Débora, a falta de investimento privado, que é bastante mais baixo do que acontece nos Estados Unidos. E para ela, a explicação tem duas frentes, digamos assim. Uma do lado da procura e outra do lado da oferta. Do lado da procura, segundo ela, isto tem sobretudo a ver com problemas na criação do mercado único, que não é ainda suficientemente desenvolvido, suficientemente unificado na União Europeia, o que implica que haja falta de oportunidades de negócio para aplicar o investimento. Mas também há problemas do lado da oferta de fundos, porque, segundo ela, continua a haver dificuldades em canalizar as poupanças dos europeus para investimento produtivo de longo prazo, sobretudo na fase de crescimento das empresas mais inovadoras. É aqui que entra, em grande medida, o BEI, mas também são necessárias outras medidas que permitam desbloquear o investimento privado. Falámos por isso mais em detalhe de várias medidas que já tinha falado na conversa com a Presidente Nádia Calvinho e falámos sobre talvez um dos principais desafios políticos atuais da União Europeia. É que a União Europeia está ainda um pouco na dúvida em relação ao melhor caminho a seguir entre, por um lado, maior abertura comercial, tem assinado vários acordos comerciais, por exemplo, com a Índia e com o Mercosur, e, por outro lado, tomar medidas de protecionismo, algumas delas poderíamos chamar-lhes de política industrial, que visam proteger a economia europeia. Por exemplo, ainda há poucas semanas, a Comissão Europeia lançou uma proposta para tornar obrigatório que determinadas indústrias comprassem produtos feitos na União Europeia. Uma medida não muito diferente de algumas medidas tomadas por Donald Trump nos Estados Unidos. Falámos também das medidas do BEI em relação a Portugal, que têm sido várias e, por exemplo, nos últimos tempos relacionadas com o problema da habitação. Talvez não soubessem, vale a pena ouvir. Já agora uma nota curiosa, que provavelmente não sabiam, Portugal faz parte do BEI há mais 10 anos do que faz parte da União Europeia. Espero que gostem do episódio. Voltamos daqui a 15 dias com um grande convidado. Até lá!
O café do teu hotel é incrível. É Nespresso. Já conheces os planos soluções-chave na mão? Não, o que inclui? Escolhes a máquina e o café. O resto tratam eles. Entregas, reciclagem, assistência técnica. Perfeito para o meu escritório. Café sem complicações.
Nespresso Professional. Soluções-chave na mão. O plano de café ideal para o seu negócio. Saiba mais em nespresso.com/pro.
Well, Deborah, welcome on Courtesy Integrar, first of all.
Thank you very much.
Tell me about the investment report for people who don't know what it is.
So the investment report is the way in which at the European Investment Bank we take the pulse on investment in Europe. It's our flagship report. We do it once a year, and we really look at investment, what's constraining investment, what Europe should do. And this year we have a message that we try to push it on the positive side. So we, but it has areas of grey to look at it. So we start from looking at what happened to investment in the last years. In the last years we have seen many shocks, continuous series of shocks coming out. And despite that, investment has been relatively resilient overall in Europe. The resilience is very much depending on very strong policy support. Actually, government investment has been very strong. I think all countries knows about the Recovery and Resilience Facility program that has been really pushed investment, and particularly in the green and digital. So you really see the government expenditure overall shifting because of this policy priority.
Yeah, which was supposed to be to recover from the pandemic, but then it was kind of
but it's okay.
useful.
It was designed to recover from the pandemic, but then it was very important that money had to be spent in digital and green and other policy priorities. So it was a way of recovering, but moving the public spending toward a very important policy goal, like digital and green. So in fact, we have seen this transformation of the economy happening. And that's the positive part of the story. At the same time, in most countries, actually, support of the public sector to corporate investment was also relatively strong, but corporate investment has been flat overall in Europe in the last years. So our concern is that we need to see much more investment coming. We need to see investment for many different purposes, for defense and security, for digitalization, for the energy transition, and also for energy security, which is quite important, and for competitiveness. But this comes in a moment in which corporate investment is flat, despite a loss of support still coming in. So the point is, what can you do to really support more private investment and convince firms to invest? Where we come out, it's that, in fact, firms invest when there is a good business case and good business opportunity. So the number one policy priority should be make sure there are good business opportunity. And then it comes the whole discussion on integration of the single market, integration of the single market, simplification, better business environment. If you go that way, business opportunity will emerge. And in the report, we look at the effect of the European single market on investment over time. So the whole process of European integration was can explain 25% of the additional investment that we have seen since the 1980s. So 1/4 on investment growth is explained by integration, but integration is stalling. European firms are telling us that 62% of European firms are telling us that when they export to another European country, they face frictions. And then in some way, if you could eliminate this barrier and this friction, investment ratios would increase by 10%, which is a start. And I think it's quite important
there's that famous IMF study where they, where they try to proxy the equivalent of tariffs on the barriers to the internal market.
We work very much with the team, and actually we exchanged a lot of notes, and we are really convinced of the effect of these barriers on investment. What a lot of people don't realize is there was a very nice article on the FT, actually, looking at one example. It was a small doll from IKEA, I think, that had 5 labels along half a meter. I'm exaggerating.
One for each country.
But basically, the label was going from, in France, when you stop playing with this toy, you have to recycle, putting it in the bin of color yellow, blue, whatever, etc. In Sweden, to use these toys, you cannot give it to a kid below age. So this is the kind of friction. Then IKEA can manage it. It's big. They have all the lawyers of the world, etc. If you go to a small country, it's a bit discouraging to serve the whole market, etc. And that's the kind of friction that are trivial things. But at the end, Europe really has to crack down this level of fragmentation. In the discussions, everybody's talking about gold-plating regulations. So there is something coming from the European side, and then it goes at the national level. You give a gold plating, you make it slightly different, but that means that you fragment the market. So that's where we think that a lot of effort still has to come from European level, but it's at the member states level that this friction comes out. So member states have to do also their own work. But the effect is more business opportunity and then more investment. And that's the good part of the story. The other part that we think is quite important is this trade agreement that we have seen in the last months, a strong acceleration of trade agreements. We think they have a potential, and particularly some of them have a very strong potential.
You mean the Mercosur and the one with India?
The India one, actually, is quite important. We think they have the potential of increasing 20% of the bilateral export with the region involved, and overall roughly 3% of European export. That's meaningful, and it's actually creating, again, a business opportunity that is what we need. So on private investment, we see focus on business opportunity, create an environment for business opportunity. On the public sector side, we have a lot of needs at the European level. The size of the EU budget is what it is. It's defined. There is not much likelihood that it will become much bigger. The Recovery Resilience Facility is finishing. The EIB is doing its part. We are lending a lot. We actually increased our lending capacity strongly. But at the end, the amount of European public money going for European public goods, if you want, activities are constrained. So
how do we compare with the US? I mean, I've seen the figures, but I'm not completely sure.
The European budget is 1.3% of GDP, the European budget. Then at the national level, European member states, they go from 30% to 50%, something like that. And then in the US, it's some 35% of GDP that is at the US level. So actually, you compare 1 to 35 in the US. We are talking about public expenditure.
My question was actually more about the investment programs from the state. So here we have the IB, of course, we have the Commission, we have I'm talking about programs at the EU level.
Yeah.
But we don't have anything like DARPA, ARPA, like they have in the US, which many people call the hidden developmental state. So it's a funny concept. Like in theory, the US is very market-oriented. We don't want to intervene or anything. But then they have these massive programs. Many of them are spread out through agencies. Some of them are implemented on a federal level. And if you look at the amount of funding they have, it's actually much more than we have here.
Yeah, I think it all comes on how much money the U.S. government for a U.S.-wide program has, even if implementation is done at the national level, and how much money the EU have as for a European program. And that's what we were saying, that at the EU level, you have 1.3% of GDP. It's not much.
It's much lower, yeah.
So particularly on the innovation side, actually, I think that's one area that is quite interesting and quite close to what I think we are proud at the EIB, that we are playing a very important role in these areas. We are, as an institution, playing a major role in venture capital and in venture debt. Actually, we are quite a strong supporter in the market. And by having developed since the beginning these markets, actually we are very close in understanding what are the gaps and where the market should evolve. We realize that one area where companies start having problems is when they start becoming, we call them in the scale-up phase. They big enough, if you want, that it's become a problem for the kind of venture capital funds that we have in Europe. The venture capital funds are not big enough to invest in these companies. If they buy one, they finish the money, they have no diversification, etc.
That's an important point, because since they don't have that much money, they cannot diversify away, which means they are very risk averse.
So at the end, the market doesn't work when the firm start to become bigger. And that's where a lot of firms, also before, but they go abroad. So what we are doing is we already did it with what we call European Tech Champion Initiative. We have started investing in firms that are bigger, so the bigger firms can invest in scale-up funds. And now we are looking at doing even more, actually, at expanding this program, and also finding ways, and that's very important for the Saving and Investment Union, finding ways to attract pension funds and insurance to invest with us, with the EIB group, with the EIF, in these funds or in companies together with us. And the reason is simple, because in Europe we have a lot of money that we call like a dormant saving or dormant wealth. And we think that this is bad for two sides of the picture. On the one side, bank deposit don't pay that much. So you have a lot as an individual, you have a lot of money in the bank deposit. It doesn't pay much, maybe it covers inflation, maybe no. But actually people will have issues at a certain point with their saving of the life for the pension. So you want it for individual people to have enough savings in the future, and you also want it because the pension and insurance funds are actually passive long-term investors, and they could easily invest in private equity, venture capital, innovation, if you find the schemes that suit them. So schemes that are control of quality, that stable enough, etc. And that's what we are trying to do. And also another thing that the EIF, our daughter institution, is doing, we have started publishing all our track record of performance of our investment in venture capital. And this is extremely important because you have some pension funds, insurance that are very sophisticated. In the Nordic countries, they know how to invest in venture capital. So they don't need necessarily us. They may need us to invest out of their comfort zone of the Nordic countries to access other countries. They may need us. They may be interested in us. Maybe they could do it also by themselves, but they are interested in our generation and assessment capacity. But there are other countries in which pension funds, insurance, but even foundations, they don't have this expertise. They understand that they may want to do it. They understand it's a good process. And then they start learning, doing it with an institution that has a strong track record and also puts a quality stamp on the technology which it's investing.
Yeah. It sort of solves the trust problem.
The trust problem, yes. And then one shares the up and the down, but it's fine. But you know that we have engineers that are very expert on specific technology that look in detail the company, etc., and decide to invest. So it's a sort of quality stamp on the institution. Maybe if you are interested, we did years ago, no, actually not so much ago, we did a study looking at, we have a product that is called venture debt. And the venture debt is financing companies between the first and the second round of equity financing, so innovative companies. And what we see is that the firms that receive our venture debt program, they invest more after 3 years, so it's statistically proven, etc. After 3 years, they grow faster, they invest more. But what is most important is that at the next phase of financing, they get a much better financing deal. And that's exactly because when they go to the next phase, they are, first of all, by having this venture debt, they are less stretched because they have already a debt. But most importantly, they have a quality stamp on the technology that then pays off at the moment in which they go on the second round of finance.
That can be just correlation. Now I'm being
No. There is
but the story makes sense.
Here.
It makes sense.
You will see it. There is a lot of causality control.
And I've seen EIB Group is in Europe, 35% of the venture debt market.
Those are huge numbers. 35% of debt and 25% of capital.
Yeah.
I talked about that with the president yesterday. It has a good and a bad side. So on the good side, it shows that the EIB is doing an important job. On the bad side, it shouldn't need to be doing such an important job, right?
It's true, and I think this is something not only on venture debt and venture capital. I think it's a part of a growth of a market. But I take the point that you are making. I think this is a concern that we have in general at the European level in this moment. We come from years in which public support to the private sector was very strong. So the first point is something is happening, we need the policy support. We need the policy support. And that's exactly why we say in the report, and we show it, actually you need a business opportunity first. And then after business opportunity, there are cases in which you need the policy support, but the policy support should be very targeted, because otherwise you distort the market too much and you create dependencies on policy support.
And how do you target it?
I think you have to be very precise on the policy objective that you want to achieve and refine what you do. We have a very strong take that everything that is innovation related, etc., it's good. Actually, it's quite proved by all economic theory that actually you have market failures that you could solve with the policy support. But particularly now when with trade disruption, global competition, global competitiveness, industrial policies, etc., it's very important to look at what you do and why you do it. So one way in which we are doing it, and also the Commission, actually we work very closely with the Commission, is we look at the competitiveness of European industries at a very, very granular level. So we go almost at the product level. And we look at areas in which Europe is competitive already, areas in which Europe has all the industrial capabilities, but is not yet fully competitive. But also we look at, in these segments, do we see a lot of innovation happening or not? And the idea is that you want to support industries that have a potential, but then the potential comes from industrial capability, but also from the fact of having innovation coming in. And that's where I think we have to define policies in order to support where we can do something for the future.
Would you call what the EIB is doing industrial policy?
The EIB, that's. I think we could be part of.
Provocative question.
No, it's a provocative question, but I think it could be part of European industry. It is. It is part of. The terminology of industrial policy is very vague.
Yeah, it's a bit fuzzy.
But I think Europe is moving toward more industrial policy, and the EIB is a part of this.
Yeah. Actually, just yesterday, the Commission announced something which is that very much industrial policy in trying to...
But also at the Commission level, the proposal announced, it's still negotiated, etc., is part of a very delicate balancing act.
Yeah.
And I think we will see this more and more coming up, in the sense that it's nice. I was just looking, so in the same moment in which it's speaking about European support, European interest, is speaking about remaining open to trade, is speaking everywhere is written targeted. So it's exactly what I'm saying. So it gives the idea that Europe really wants to continue to remain open, understands that in some areas we need to support industry. We have to leverage much more the dimension of the European single market. So that's also coming on procurement, etc., to have some power associated to the size of the European market, also in terms of procurement and certainty of demand. But it's all targeted and keeping the focus on openness of the market. And I think that's important because it's an asset for Europe, also the trade.
Yeah, definitely. The issue with industrial policy in general is that it means that you'll make choices. Yesterday I did something interesting. I looked at your first investment reports.
Oh.
and the tone is quite different. So back then in 2016, it was like after the crisis, it was all about bringing investment back in general, so regardless of the type of investment. Now it's much more specific, right? More targeted, which is a good thing, but you might face, I don't know, I imagine.
But you know, that you bring it up. When we wrote the first report, I think nobody cared about investment, really. So it was, at the time, the EIB was coming out with the Juncker plan, the EIB, the Commission and the EIB were coming out with the Juncker plan. The Juncker plan was based on a working paper that we wrote, actually, on what are the gaps in terms of investment in Europe. Everybody was like, no, that's not serious. Because we were like doing some quantification coming bottom up, saying, look, in the US, they invest X in R&D, we invest half. So you should. So it was
already back then you were saying that.
But we were showing where the investment gap were coming. And really it was very difficult to convince people, mostly policymakers, there was an investment issue in Europe. And then now I think everybody is fully confident. It helped. No, it helped. Many think it helped that working with Draghi took a lot of our work. That helped.
But it's fun how our priorities change. Like I teach a course on banking regulation, and yes, I was doing it yesterday, and there's some point we talk about banking union and the common deposit insurance scheme. And you remember that was a very hot topic back in the day. Nowadays, nowadays no one really cares about it. No one really talks about it.
Yeah, but that is, I think everybody cares about it. We all know that we are not going anywhere without it. The problem is that the politics it doesn't play.
I know, but that could be said about this issue back then, right?
Yeah, that's true. But on investment, people move.
What do you mean?
It's easy.
Now it's understood.
It's easier to get a political agreement on a positive thing like investment rather than a common, if you want, a deposit insurance, it's a common liability. That is much more difficult.
And it's something that might happen, whereas
investment is much easier to get a policy agreement.
And it's, I mean, we have to be frank, this became an issue for geopolitical reasons, basically, right? That was what brought it to the table. Okay, Debora, so let me try and summarize what you told me. So the way you view this, if I understand correctly, is that this is the problem. It has two causes. So demand side and the supply side in a sense. So on the one hand, investment is low because there are not enough opportunities, and that has to do especially with the single market. So if we had a more perfect single market, there would be more opportunities. We need to correct that side. On the other side, it has to do with access to funding. And so one initiative there is, of course, the Savings and Investment Union, whose purpose is to bring people's savings out of the deposit accounts and whatnot into more long-term innovative investments. And on the other hand, there's public entities like the EIB, right?
Yes.
Who are doing your part to try and correct these market failures along the way. To finish, explain me in a bit more detail what the EIB does, because you guys do many different things, so ranging from loans to capital investments. Sometimes you work with banks, other times you work with investment funds. How does it work?
So we are. It's interesting what is the EIB, because the EIB is a European institution, number one. So our shareholders are the European member states. They put when a country enters the European Union, they put capital in the EIB. So the last one was Croatia putting capital on the EIB. Then this capital grow over time. The institution has also the capacity, based on its capital, to issue bonds and finance through bonds. So we are an issuing institution, and we issue something that is a EIB bonds, guaranteed AAA, guaranteed by our capital, but is in fact a European investment bank bond, European bond.
They are the first European bonds in the sense, right? Right, the first pan-European.
And then we operate according to policy goal. We have several activities that as an institution we pursue. And then we can have different kind of instruments. We can have loans to counterparts, and when we lend, we actually, normally because we are a AAA institution, so we have a lower cost of funding than the counterpart we lend to. And in that case,
would be the bank. Would be a bank in this case.
Can be a bank, it can be a corporate, it can be a government.
Do you lend directly to corporates?
Yeah.
Ah, okay.
And also to government institutions, so to a region, a city to the public sector. And then we basically pass the financing advantage to the counterpart. So they have the advantage that doing a project with us, the funding cost advantage is passed to them. And also we pass competences, because we help financing a metro line. We have done a metro line all over the world, so we can tell, look, this is better, this is not, etc.
That's interesting.
And we have advisory programs coming in as well. So that's on the lending side. We also, you mentioned to banks, we lend to banks, asking the banks to build a portfolio of loans to SME. Again, the funding advantage is passed to the SME, and to the SME we mostly ask to do project on energy efficiency, on innovation, etc. So we ask to do certain things. On the energy efficiency side is interesting because we have quite new actually, but a very nice toolkit that actually we now provide to banks, actually in Europe, but also all over the world. It's called the Green Checker. So the bank themselves can look at the firm and see at the projects and see if the project ticks the box of being a green project. Sustainable, I don't know.
Yes.
So it's very nice because it's useful for the bank because they have a loan with us, they have to report back, etc. But it's also giving at the bank an instrument in which they know if they can call green a certain. And it's really spreading knowledge around Europe.
And everywhere.
It's also adapted for the rest of the world. So this is an example. So it's also the example of how doing a business with the EIB is not only about money, but is also about knowledge and competences, and that's quite interesting.
Yeah, and you're solving market failures too.
Yeah,
in
but
other
also
ways,
we don't call it technical assistant or advisory, but I think just working with an institution that sees so many projects. It's just when you talk with our loan officer, our engineers, over a coffee, they tell you, yes, I saw a similar thing in another country, it's interesting, etc. So there is a positive exchange. This is one part, but then there is another very famous instrument that we have. It's called risk sharing. Can go from securitization, from normal lending, or etc., in which we take a part of the risk out of a project.
The
risking, and that's other way of doing it. We are very strong, we were saying, on innovative company, on venture debt, on venture capital. On venture capital, we have a model in which we are normally minority shareholders in funds. So we try to keep the minority shareholding to have the market developing. So they keep their EIF.
That's through the EIF.
They keep their incentives as a fund.
You don't distort their incentives,
we don't distort their incentive, but support them.
And so you go through them. So you put money in the fund, and then the fund invests in company.
That's a guarantee. Guarantees from the EIF.
And the guarantees, yes.
How does it work?
The intermediary means that we are giving the money to the banks, and they can reach their smaller clients that otherwise would be too small to be reached with some specific target. Being digital and so on, that otherwise they would not.
Otherwise, another market failure.
No networks of local agency, no branches.
Exactly. You have to go through the
banks.
If you go to the Portuguese website, we have very good examples of what we were talking about.
And a project.
So last year, for example, we financed Sonai, the stores, Navigator, because it's a heavy industry. We also, with Santander, we have loans for the agricultural area. So we have plenty of good examples.
Yeah, interesting.
Deepen, with the state, social housing, we have school reconstructions and rehabilitation. So if you go there, and it's in English and in Portuguese.
Maybe another example of what we do more and more. Actually, we are convinced that in the European market there is something missing in terms of affordable housing. It's not only the social.
Where did you get that impression from?
It's not so trivial because as an economist, it's very difficult to say we have an issue in real estate. So we actually wanted to be really careful.
Okay, go ahead. I'm curious now.
And what's happening is that it's not only the social housing side, but it's very difficult to have models working in terms of affordable housing. So in the medium class, and I know Portugal, it's one of the areas with huge issues in this point of view. And what we have seen is one data that we have in the report is that 65% of people in Europe living in cities say that housing is their most important problem. And actually, the way we think is there is a lot to do also in terms of permitting land, etc. This is for sure. But there is also something to do in terms of the innovation capacity and efficiency of the construction sector. In the last 15 years, the productivity of construction sector has been declining.
Yeah.
And
whereas in other sectors
in other sector is, but also what happens is construction innovated a lot in terms of materials, but then when you go to the building sites, there is innovation, but it's not applied at all. So in fact, the thing that we all see, like you renovate an apartment, the plumber comes 3 weeks after, and then delays and this and that, etc. You have a way for controlling it now in terms of systems, but they are rarely applied. So there is something on the innovation side and particularly on construction side that could be implemented that help reduce the timing of delivery of housing. And that's important in terms of affordable housing.
Yeah. Okay, cool. Debora, thanks.
Thank you.
Was there anything I forgot to ask you wanted to say?
No, it's okay. And I think we ran to Ukraine.
Okay, cool. Thank you.
Thank you very much. It was good.
Now I have to run.
Yes, Yorana, bye.
Este episódio teve a sonoplastia de Hugo Oliveira. Ouça e veja outros podcasts em expresso.pt e acompanhe-me em josemariapimentel.pt ou nas redes sociais. Até ao próximo episódio.